Good morning, good morning, good morning. It's Ecom Rebel, and what have we got this morning? Just doing a quick update on the market. Going to have a look at a couple of news articles, and I just want to talk to you about a little bit about what I mentioned yesterday, Bitcoin futures and how Bitcoin futures affects the price. There was an article I read last night. So let's start off with the market. Let's have a quick market update. All right, so Bitcoin 6,449, Ethereum at 489, Ripple at 53 cents, Bitcoin Cash 852, EOS $10.82, Litecoin 96.27, Stellar 23 cents, Cardano 16 cents, IOTA $1.18, and Tron at 4 cents. Now the Bitcoin's down about 3%, the highest in that top 10, probably IOTA and Tron down between 6 and 7%. So market's a little bit down. Volume's still low at 10 billion. Bitcoin dominance at 39%. Market cap sits right now at $277.58 billion. Okay, so I just want to talk about some of the news that I saw. I did touch this briefly yesterday. So there was two things. One was the about the Bitcoin, Ethereum, all the cryptos not being considered, especially Ethereum, not being considered as a security. Now, this also means that Ethereum could become futures in the futures market. Okay, so I thought I might talk a little bit about the futures market this morning. All right, just give me a second. I'll just bring up a window. Morning, Brad. How you doing? Yes, it is a bit cold today. Mind you, if you're standing out in the sun, it's not too bad. All right, so let's have a quick look. So this was an article similar to the one that I spoke to about last night. And this is from Thomas Lee. Now, it said weakness in Bitcoin is caused by futures expiration. And he goes on to say that in a report, the dropwards of up to 20% earlier last week was a result of futures contract expiring. And they're basically saying that this has happened 6 times since the launch of the futures contracts since December 27. Now, this guy Lee, Bitcoin sees dramatic price change around CBOE futures expirations. We compiled some of the data, and it indeed seems to be true. So basically what he's saying is Bitcoin usually drops around 18% in 10 days before futures expiration, and the prices generally recover within 6 days afterwards. He explains that if a trader is long on Bitcoin, meaning they want it to go up, and short in the futures, holders may sell large shares of BTC at the volume-weighted average price as contracts move close to expiring. So near expiration, however, they may sell the remaining Bitcoin, which causes the price to drop and leaving the short position in the futures they close with a handsome profit. So he's basically saying that this is going on, and at the moment we've just finished. I think it was on about a day or two ago that it expired, and we've seen like another low from Bitcoin, like a sell-off. So it's definitely something there. He's saying that it's happened. There is an article that talks a little bit more about it. Let's have a quick look. So what I might do now, I'll just quickly jump to like a quick explainer of what futures is, okay? So I'll just read this out to you just so you've got an idea. So this is what is futures. Futures is an agreement to buy or sell an asset on a specific future date at a specific price. Once the futures contract have been entered, both parties have to buy and sell on the agreed upon price, irrespective of what the actual market price is in the contract execution date. The goal is not necessarily profit maximization. It's a risk management tool often used in financial markets to hedge against risk of changing prices of assets and bought and sold on a regular basis. Futures are also used in portfolios to balance out price fluctuations in investments where the underlying asset is particularly volatile. These contracts are negotiated and traded on the futures exchange, which acts as intermediary. So how do they work? There are 2 positions you can take on a futures contract, long or short. So if you take on a long position, agree to buy an asset in the future at a specific price when the contract expires. When you take a short position, you agree to sell an asset at a set price when the contract expires. So a good way to explain this in the example of an airline who wants to hedge against the rising price of fuel by entering in a futures contract. So say jet fuel trades at $2 per gallon. An airline expecting the price of oil to rise buys a 3-month futures contract for 1,000 gallons at current prices. The contract is therefore worth $2,000. Now in 3 months, when the contract expires, the price of the 1 gallon of jet fuel is $3. So therefore the airline has saved $1,000. So the supplier will be happy entering the futures contract in order to ensure a steady market for fuel. Even when prices are high, the same contract will also protect them if the price of the fuel unexpectedly drops. So in this case, both parties protect themselves against the volatility of fuel prices. There are also investors who speculate with futures contracts rather than using it as a protection mechanism. They will deliberately go long when the price of the commodity is low. As prices rise, the contract becomes more valuable, and the investor could decide to trade the contract and with the other investor before it expires at a high price. So what about Bitcoin futures? So futures are not just for physical assets, they can be traded on financial assets as well. So with Bitcoin futures, the contract will be based on the price of Bitcoin, and speculators can place a bet on what they believe the price of Bitcoin will be in the future. In addition, it enables investors to speculate on the price of Bitcoin without actually having to own Bitcoin. It has two major consequences. First, while Bitcoin itself remains unregulated, Bitcoin futures can be traded on regulated exchanges. This is good news for those concerned about the risk related to industry lack of regulation. Second, in the area of trading Bitcoin is where it's banned. Bitcoin futures allow investors to still speculate on the price of Bitcoin. So how does it work? The Bitcoin future will work on exactly the same principle as the futures on traditional financial assets. So by anticipating whether the price of the Bitcoin will go up or down, speculators are either going long or short on the Bitcoin futures contract. So an example, if an individual owns one Bitcoin priced at $18,000, hypothetical, wouldn't be good if that was that, and foresees that the price will drop in the future, to protect themselves, they can sell a Bitcoin futures contract at the current price, which is $18,000. Close to settlement date, the price of Bitcoin, along with the price of the Bitcoin futures contract, would have dropped. The investor now decides to buy back the Bitcoin futures. So if the contract trades for $16,000 close to the future settlement date, the investor has made $2,000 and therefore protected their investment by selling high and buying low. So this is a basic example of how Bitcoin futures works, and the exact terms of each futures contract may be more complex depending on the exchange, which will include minimum and maximum price limits. So what do Bitcoin futures mean for Bitcoin prices? So in the short term, it pushes the price upwards as the overall interest in the cryptocurrency spikes. So the day after Bitcoin futures were launched on CBOE, which is the Chicago Board Options Exchange, for the first time a major regulated exchange, the price jumped almost 10%, that is to 16,936. Similarly, in a run-up to the launch of Bitcoin futures on one of the world's biggest exchanges, CME, the Bitcoin price broke through the 20,000 barrier. The long-term price impact is harder to predict, but it's all likelihood that it will continue to boost the price of Bitcoin. So does this mean the price is most likely to go up? There's several reasons why this is the case. As Bitcoin futures can be regulated on public exchanges, it gives people who were previously skeptical a result of the lack of regulation the confidence to invest. Investors are more likely to offer Bitcoin futures to their clients as a viable investment option, and it brings more liquidity into the market, making it easy to buy, sell, trade the crypto, and therefore much more lucrative. It opens up Bitcoin market to a wider investor base, including countries where the trade of Bitcoin is being banned. As futures are designed to balance out price fluctuations of underlying assets, it could also be the price of Bitcoin may be less volatile. So what does it mean for the whole blockchain industry? So there's a couple of outcomes. First, Bitcoin is seen as a sort of poster boy for cryptocurrencies. Therefore, if the price of Bitcoin sees massive increases in a short space of time, irrespective if this is due to Bitcoin futures or otherwise, more people tend to take notice. As more people become aware of crypto industry, the uptake of altcoins will increase and push prices upwards. The flip side is also possible. Investors might want to sell their altcoins for Bitcoins in order to take part in its bullish run. Large-scale exits could cause a dramatic drop in the price of alternate cryptocurrencies. The more likely scenario is that some of the stronger altcoins like Ethereum, Litecoin, Ripple, etc. might follow in the footsteps of Bitcoin and become tradable as futures as well, once interest from those investors becomes strong enough. So where can you trade Bitcoin futures? There's two separate markets at the moment where you can trade Bitcoin futures. The first one is BitMEX and OKCoin. Cryptocurrencies have been offering this option for quite a while now, and it remains largely unregulated. The second option is a publicly regulated exchange, and this is a recent thing since December on CBOE's Bitcoin. This launched on 10th of December. And the Chicago Mercantile Exchange, CME, followed on the launch of December and set to trade December 18. So also TD Ameritrade and JP Morgan have expressed their interest. So look, there's going to be more futures markets open, and basically it does two things. It allows more investors and traditional investors to come into the market and basically invest into Bitcoin, okay? And now they'll probably be releasing Ethereum, and they'll probably have futures on Ethereum, I would say. So this just means more investors coming in the market, more money is coming into the market, which is going to increase, the overall amount of money. This is going to increase the. Let's have a look here. Basically the total market cap is going to go up when you've got more people investing more money into that. All right, so this is the original article. I'm just going back to the relationship here with the futures. This is the article that Lee talks about. Now, Lee basically was explaining the futures. So what you need to be aware of is when their next expiration date of the futures could be looking at, depending on whether they're going long or short, is whether you're going to see a dump of Bitcoin on those things. But right now, if this is the case, that means we should be looking at a bit of a bullish move shortly, and maybe even a rally from Bitcoin, because it has. We're looking at 18 to 20% in the last 10 days. So yeah, it's a very interesting thing, but it's something to make sure that you're aware of. And for the time being, just be aware that when the market is down like this, it's not because everyone thinks that Bitcoin's bad or anything. It's just simply people are making money and they're in a position where they can, and so they are. And so if you had the Bitcoin and you had a futures and you knew that you could trade this market and make a ton of money, then you would probably do it. And so you're sitting here thinking, and with maybe a bit of Bitcoin or something like that, and you think, oh my God, it's gone down. It's only 6,400, and it was 20,000. Should I sell out? But really, you got to look at the bigger picture and just go that there is bigger players in the market making money, and you just need to align yourself with that. So at the moment, be aware of it. So look for the expiry dates. If I find out the expiry dates for the next lot of futures, I'll check them out and let you know. And be aware that within just before expiry, there could be a dump on the market for that. So we'll see how it goes. But at the moment, we're looking at a bit of a rally. We'll see what happens and see if that picks up. But we definitely are at support levels right now. And at this stage, I'm still positive. I think it's going to be going back up shortly, at least for the short term anyway. All right, so I think that's all I wanted to cover this morning. Yeah, Brad, you mentioned the Tether project. I might actually just briefly talk about that. Good point. So Tether's actually just about to release, I think they've actually went from out of beta. I'll just double check that. So they had beta, and they're releasing one of their main nets. And essentially Tether is an ICO, came out last year. I got into that ICO, and a couple of other people did as well. And essentially, it's buying cryptocurrency locally with your own, currencies, buying and selling. So essentially, you can become a buyer and seller and locate people around you. It's all done within an app, and you can chat together, meet up, and buy and sell crypto. So sort of like local Bitcoin, that website where you can actually do it. But this is now in an app. So in other words, you could become a seller. You could have a shop, or as an individual, and you could say, for example, sell. This is how much ETH you want to sell. This is your fees, and also it gives you your rating system and how much volume you traded. So it's a more transparent system of how to buy and sell cryptocurrencies. So this is going to open the way for a lot more people to access it, and there'll be a lot more points that you can buy it. So I'm pretty excited about this. Now, I think I'll just have a quick look at the blog. I think they actually, I've got the date I think, what's the date today? So it's the 16th today, 16th of June. Just have a quick look if they mention the date they're coming out. So they got just finished the new website. No, they don't actually have it on their blog. I'll just quickly check that latest article and see if they mention it. Because I'm sure it was the 20-something. 24th, I've got a feeling it is. Maybe it's not there. That's okay. I'll check that date that it's coming out. But it's very worthwhile to get into, have a look at that one, check it out, and essentially you just need a phone and install the app on it. And it's a pretty good project, that one. Yeah, Brad says we're next Wednesday. Yeah, I think it's like within, literally within a week. It's not very far at all. So yeah, that's very exciting news. I always like when new projects that you can actually use come out. It's all about using, if it's just a speculative thing, that's not going to help the whole ecosystem. But once you can use crypto, like you can use cash and you can trade it and exchange it and buy and sell more things with it, and it's accepted more places, then it works just like cash. And so that's what makes it exciting. All right, I think that covers about it. I will try and catch up with you guys this afternoon. We'll see what sort of updates and what the market's doing. Have a good day, Brad, and the rest of you guys. Have a good day, and I will talk to you again later on. Okay, see you later. Bye.